G'day guys, Jay Senior here and welcome to another episode on the Australian Wealth Channel. And in this episode, we're going to be talking about 3 of my favorite stocks that I'm watching right now. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. Really helps to get these videos out to more people. So in this video, we're going to be talking about my 3 favorite stocks that I'm looking at the moment. Some of these I'm buying, and there's one of these particular stocks that at the moment I'm considering starting a position. It's a stock I've actually held before, but more on that a little bit later. We're going to start with number 1. So of course, when we're looking at these stocks, it's really important not just to take my word because I think they're good. You need to do your own research. It's not financial advice, just education and information. So first of all, the stock that I am most bullish on and I continue to add to is the Tattooed Chef. So anyone that's been following this channel knows that I'm a big believer in Tattooed Chef, a fantastic company that has been doing fantastically in regards to all of its financials and its earnings. So I just wanted to talk a little bit about that. So Tattooed Chef recently announced their earnings, and it turns out that their branded product revenue, which is the reason that everyone's in the stock, they also have a private label business, but the branded product revenue was up over 60% year over year, which is fantastic. You know, this is a food company that's growing faster than basically any food company in the entire world. They continue to execute at an incredibly high level. And it's a company that I'm still very bullish on. And as the stock has dropped recently, I've actually bought very heavy. I actually have an $80,000 position in the Tattooed Chef at the moment. So branded revenue is up 62%, and they've updated their outlook to say that they're going to be in another 2,000 stores by the end of the year, which is fantastic. It was going to be 10,000, but now it's going to be 12,000, which is fantastic. And they also announced recently that they've finalized the deal with Publix, which is the fourth biggest grocery chain in all of America. And Tattooed Chef is going to have their products in those stores, which is very exciting. It's going to help to contribute to their revenue numbers, probably come Q4, probably not Q3, which is what we'd be in right now, but in the future, we'll see that filter through. You know, but they just continue to execute on an incredibly high level. You know, time after time, they're in Kroger, they're in Sam's Club, Walmart, all of the places where it's really important for a massively growing food brand to be, and they just continue to execute, and it's fantastic to see. So their gross margins have increased, so that's fantastic, and they've got $140 million in cash lying around at the moment. I believe that the market cap is roughly $1.3 to $1.4 billion at the moment. So based on the growth rate that we're seeing for the Tattooed Chef, if they can continue at a very high rate like this, then this valuation for me is very cheap, and that's why I've been continuing to add. I'll probably continue to add to this stock up to about $100,000. So I think that'll probably be the extent of my position, because as bullish as I am, it's really important to measure your risk and make sure you have a little bit of a spread over some different stocks, which I'm going to talk about right now. Now, the next stock that I am incredibly bullish on is, of course, Coinbase. Now, anyone that knows anything about cryptocurrencies knows that Coinbase is basically the largest exchange in the entire world. And the other thing that's fantastic about Coinbase is they're quite safe compared to a lot of other exchanges. In fact, they have never been hacked up to this date. So that's one of the things that Coinbase provides that a lot of other exchanges don't provide, and that is really strong security for anyone using cryptocurrency. So I personally don't invest in cryptocurrencies myself, but of course Coinbase is a great bet, I personally believe, because it's like the gold rush. A lot of people are buying into cryptocurrencies, and it's very much the same as what's happened in gold rushes in the past. There's a lot of people trying to find that gold, you know, find that next token or that next thing that's just going to explode. But the people that made so much money were the people that were selling the shovels for the gold rush. And that is exactly what Coinbase does. Their transaction fees are really good. They make massive margins on what they're doing. Their revenue is just growing off the charts. In fact, this last quarter, their revenues were $2.2 billion. So this is an 1,000% increase compared to the previous year. So this company is just growing at an insane rate, which makes me really excited. Their net profits are up even higher than that. They're up to 1.6 billion for the quarter. So that's an increase of 4,900%. what more can you say? It's a massively growing company in a massively growing space, and that is what I look for when I'm personally investing in a company. So Coinbase, their monthly transacting users has increased even further, 44% this quarter compared to the last one. And this company is just growing into their valuation really quickly. They currently have a valuation, I believe, of around 50 to 60 billion. You know, obviously it fluctuates day to day, 54 roughly at the moment. So based on what we've seen from the company, they're growing into this valuation incredibly quickly. So it's an exciting time for Coinbase, and I believe that this stock is going to go back to that $300-400 mark. It's currently sitting around that 250. I'll be buying anywhere between 220 and lower, of course, all the way up to about 300. I feel quite bullish for this one in the future. And the final company that I want to talk about in this video is Wynn Resorts. So for people that aren't familiar, Wynn Resorts is one of the biggest casinos in Las Vegas, and they also have operations in other parts of the world, including Macau, and they're building casinos elsewhere in the US, which is really exciting for them. So currently, this company has a market cap of just over $10 billion. So that if you wanted to buy Wynn Resorts, that's what you'd be paying outright to purchase them. So in 2019, which was a little while ago now, they had revenue of $6.6 billion. So I wanted to bring it back to 2019 because that was the last year that we had before this crazy world event, which everyone is familiar with. And anything that was in hospitality or entertainment just got absolutely crushed. You know, it's just been an absolutely brutal time. So I wanted to just take a look at that figure just for a bit of perspective on what Wynn Resorts is very likely to get back to in the future. In fact, gaming revenues in Las Vegas are actually higher now than they were in 2019. So this is a great thing for Wynn Resorts. So Wynn trades at the moment under $100. It's about $88, I believe, for a share of Wynn Resorts. So anytime it's trading under $100, you know, that's looking pretty damn attractive, especially if you're looking at a historical chart. Because in normal economic times, Wynn Resorts is just a profit beast. You know, they make a lot in revenue, and their margins aren't as amazing as, say, like a Coinbase, but the company is just so big that they're making so much money. You know, normally it's over $500 million in profits, which is just fantastic. So the real question is whether the delta is going to take off again, or whether it's going to be the same as what we've seen in the UK, where it spiked and then it came down. I personally believe that something similar is going to happen in the US, and it's just not going to be as bad as what people think because of the vaccination rates. They are continuing to go up, which is great. Of course, you know, I'm actually getting my vaccination this week, so hopefully here in Australia we'll be able to reopen soon. So if the US does go into shutdown, this is going to be really bad for Wynn Resorts. There's no way to slice and dice that in a different way. It's going to be really bad. But that of course means that the share price is going to be cheaper, which might present a better buying opportunity. Again, I personally don't believe that the US is going to go into shutdown. I think it's going to be minor restrictions at best. I just don't believe it's going to be in their culture to go into another shutdown. So there might be a better buying opportunity for Wynn. So it's one to be careful of in the short term. But if the price does continue to drop, then it's going to be looking pretty damn attractive. You know, if I see it go under that 80 mark, I'm going to have to really consider putting some money into Wynn Resorts myself. You know, it's just one of those things that you can't ignore from a value perspective. You know, we made that play back in March 2020. I ended up buying Wynn Resorts and also Carnival Cruise Lines incredibly heavy, and managed to get Carnival under $10 a share. And since then, went all the way over to $30. I sold out at 28, but of course now there's a bit of fear around the delta. We've seen it actually drop down to about $21 a share for Carnival, and I think something similar is probably going to happen. You know, I kind of saw that reopen trade finish, and of course a lot of money has moved away from those stocks and more into big tech as more of a safety play. It seems to be where the money goes if people are concerned about outbreaks or anything like that flaring up again. So if we look at Wynn Resorts and we get back to normal economic times, making profits of over $500 million a year, at this price, it's looking very attractive. Now, of course, we'll just have to see how things turn out. You know, I don't know where Wynn stock price is going to be in the future, but a lot of analysts are estimating that this is going to go back to $120, $140 a share, and I tend to agree with them in this particular instance. So just keep in mind that Wynn Resorts does have a lot of debt also, because running casinos is very expensive. Something else to keep in mind is that Wynn Resorts has also launched an online gaming facility. So moving with the times, a lot of other casinos have partnered with people to enter into that online space and are expected to generate revenues of over $1 billion in 2021. So this is another great growth vector for Wynn Resorts. So who knows, we'll just have to wait and see. So I'd love to hear what you guys think about these stocks, or if you've got any other stocks that you're watching, you're potentially buying. I'm always keen to hear more to see what is going on in the community. So thank you guys so much for watching. Please make sure you like and subscribe. It really helps to get these videos out to more people. So my name is Jay Sini. This is the Australian Wealth Channel, and we'll see you later.